Is it true that new construction homes right now are cheaper than comparable existing homes?
The new construction homes are getting cheaper than existing homes, and affordability is actually in a better place now than it was this time last year.
Why is new construction cheaper than existing?
Inventory. We now have 30% more inventory now than this time last year.
What about prices overall?
So prices overall, they're defined by price drops right now. 36% of homes on the market have a price drop. That's more than any April in the last 12 years.
The last time I saw what I'm about to share, the federal government actually intervened in the financial markets and it stabilized housing. I was so confident I knew what was going to happen. However, I was wrong. And so what I'm going to do today is just share with you what I'm seeing. We're going to talk about the shocking stats that the Compass CEO just shared about price cuts. And if you really want my opinion on where the housing market is headed, I'll give you my opinion towards the end of the video. Before we get started, if you have decided that you are buying in this housing market and you are in Nashville, feel free to reach out. I do help home buyers with data and strategy and buying a house using methods that very few other real estate agents actually use. So if that's you, feel free to reach out. Now, the Compass CEO mentions two shocking statistics. Price cuts as a percentage of active listings and new build prices are actually lower than existing. Now, these two metrics in and of themselves are very bearish for pricing. Altos Research validates this.
As of right now, there are more folks on the market with price reductions than have had in any April in like 15 years. That means there is very little upward pressure on pricing. And if this number turns higher, that's a signal of even fewer buyers, like buyers walking out. Price reductions are kicking up. That's a signal to sellers to say, like, look, do you want to be ahead of this curve or behind this curve? And there's nothing in the data that says that this is all getting better later in the year for sellers. So it's really, if you're thinking of selling in 25, sooner is better.
Now, it's not just that price cuts are taking off. We're also seeing the new build competition pick up. We've been 2 years into this mass building of inventory. And so what I think is going on now, I think there's just so much more inventory. Just like Robert Refkin, the Compass CEO, said, and you have existing inventory that's now coming online in better locations. I'm going to show you an example of what you should look for. This is just a classic example. It was so distinct that I use it often. But what we can see here in Durham Farms, if we go back and look, so this is, I'm going to show you a scatter plot. So this scatter plot that I'm showing you right now, this scatter plot, it's all the closings over time from 2020 to 2025 and price per square foot. Okay, so that's what this scatter plot is. It's just closings over time. That gray bar is just showing you what's active in that neighborhood. But here's what I wanted to show you. So if we go and we look at just what the new builds did, look at this red. The red is new, the orange is existing. Look at this red down here. Look at how much lower it is than the existing prices. Now, you cannot have this happen for very long without it flipping. I mean, it just won't happen for very long. Well, what happened? Well, the new builds got more expensive. And if you take the new builds out, look at this. So we had the new builds get more expensive, but the existing kind of plateaued and started dropping a little bit while the new builds continued to push price and get a little bit more expensive. Now we're starting to see new builds drop. You can see how they're just at these lower price points, closer to 200 on the bottom and under 250 on the top. When we look at existing is right in the same price range. So we can see that new builds are competing. So we have price cuts that are showing very bearish signs. We have new builds that are competing now, but then we got to look at what's happening with inventory and demand. In fact, one of the reasons that inventory is ramping so hard this year is because demand is down so much. And this to me is the most shocking stat of all. Nashville demand is down 12% year over year. This is actually in the face of interest rates that are down year over year, meaning that it's actually kind of more affordable if prices are flat or basically flat. And interest rates are down almost 1%. I think they're down 0.5%, something like that. It's shocking to me that there's not more demand. Now, I was so taken aback by how far demand had fallen that I thought there was something wrong with my data. I reran it and I got the same number. If someone wants to prove me wrong, I mean, I'm open to it. It's just the last time I saw this was in the spring of 2023 with BTFP, and I thought for sure that the housing market was crashing. I was actually really excited. I thought this is my opportunity. But the Fed intervened. They offered the BTFP program, and all of a sudden everything stabilized. The housing market stopped falling. In fact, prices began to rise and we hit new all-time highs. The Fed, whatever their intervention did, saved the housing market because it did. And these are the dynamics that really make me step back and say, I don't know what's going to happen outside of the hard data. Let's look at active listings. It's another high. Now, what makes this high particularly alarming is that this inventory is at a new high on May 3rd. Typically, at the end of every month, we have the expired and canceled listings, and it takes a couple weeks for that to rebuild and to create a new high, generally speaking. However, here we're 3 days in, and we've hit a new high for the year. In fact, we're hitting a new high for post-COVID inventory. What does this mean for you? Well, if you are a buyer, it means you need to take your time. There's absolutely no reason to rush from an inventory and supply standpoint, from a price momentum standpoint. Everything is kind of leaning on your side. Take your time. You're only getting more options. And I just can't imagine, even though contract price is up, I just can't imagine these options are getting more expensive in the vast, vast majority of the areas. Now, if you're in that one tiny niche that continues to see prices go up, I mean, it is what it is. There's more demand in that price range of $750 to $1.5 million. There are people that are fine. They have savings. They're getting great savings income from interest and from stocks and from whatever else, and they just don't have a problem buying. And to give you some anecdotes, I had 2 different buyers text me in the past week about a house. And when I looked at it, it was already under contract. The houses they were looking at, and they were in 2 different price ranges. One was well over $1 million. Both were under contract when they sent me, hey, will you look at this house? But outside of that, the market's really, really bad right now. My pricing model for Nashville shows that in July, we should start seeing prices drop. This is kind of a month earlier than it did last year. And I would chalk this up to seasonality, but let's be honest, it's something that feels a little more than seasonal. But unless we drop to a new low from 2024, unless we go below that low, to me, I'm not convinced that prices are dropping. So when you do see, posts like Parcel Lab showing that prices are down in Nashville 2%, to me, if they keep running with that same stat that they're using, they're probably going to see that it's flat to slightly up in the next month. And that really doesn't show anything. What we really need to see is a genuine drop in prices that would be marked by either a new low and then a lower high. And that to me would say, okay, prices have actually dropped. I think that's very possible this fall. What could possibly change the trajectory? I think the one big question mark is government intervention. The government is already bailing out a lot of FHA homeowners through these loan modification programs that they are subsidizing and paying with taxpayer dollars. A lot of people have said they need to stop this program, and yet they chose to extend it until September. That's interesting because that's the end of this fiscal year. And my question to you is, do you really think that they're going to cut this program off in an election year to allow for a lot of foreclosures? Do I think we're primed for a housing crash? I mean, after all, inventory is super high, maybe the highest ever, or whatever dramatic chart you want to see. Demand is dropping in the spring when it should be increasing. I mean, these are very, very bad stats. Price cuts, very high. We're seeing a disjoint between new builds and existing. Could we see a housing market crash? Everyone that I follow that's convinced that the housing market is crashing or will crash or is guaranteed to crash also believes that the dollar is going to zero. And the problem I see is you can't say that the dollar is worthless and yet prices for homes are going back to 2019 levels. They're just incompatible. In my opinion, You have to pick one camp or the other. I don't see how these work together. You have to really do some mental gymnastics to somehow rationalize that the dollar is going to crash, but home prices are going to crash too. So my personal opinion is that I'm more bearish on the dollar. I think the government has no appetite to cut spending where they need to cut it. I think they're going to push for artificially low interest rates. And I actually think this tariff stuff is creating massive supply shocks that's going to create another wave of inflation. I'm open to being wrong, but that's my personal opinion. So if you do decide you want to venture into the dark waters of buying a home, I give 3 tips in this video I did last week that I think are going to be super helpful for you. Click on that video if you want to see it. And with that, I hope you all have a great rest of the day. I look forward to seeing you next Saturday. Thanks a lot.